And welcome back. It's Jason Walter here, of course. I want to give you guys an update regarding what we're seeing right now in the US because Realtor.com just announced their latest housing market update a couple of days ago at the time of this video here. And here's our actual summary regarding what they're seeing regarding the latest housing market trends we're seeing right now in the US. And just like my previous videos, I actually did not even read their analysis here. Instead, I actually want to look at their own data and provide my own analysis in today's video, just like I do every single week for you guys. Actually, last week I didn't make this video for you guys though, because they did not post last week's housing market data here. So if you go on to realtor.com/research/data, it takes you to this website right here. Click on this link right here. It shows weekly data compared to 1 year ago, which more or less looks like this. And don't be scared. I'm going to provide my analysis regarding what we're seeing right now regarding home prices, housing inventory, new listings, days on the market, as well as the share of price reductions and also the number of price reductions as well. So again, last week was November 26th. I did not make a separate video because they did not provide that week's data last Thursday. So instead, I'm going to provide data regarding the week ended December 3rd of this year. So let's first talk about home prices because look at this. The median asking price, by the way, these are trends on a national level here, of course. The median asking price only increased by 10.3% compared to the same week in 2021. And based on my own analysis here, this is the smallest gain so far this year because at 10.3%, this is well below the levels we saw back in the summer where we saw gains in the range of 15 to 18%. And back in January 1st and also January 8th of this year, we were seeing gains of around 10.5%. So the gains we have right now at 10.3%, the lowest increase on a year-over-year basis so far this year. On top of that, home prices have increased in 7 out of the last 8 weeks. We did see a slight decrease this week, but a slight increase last week. So home prices, or the asking prices, have now decreased in 7 out of the last 8 weeks. And also as a note right here, the growth is not as high as during the summer months, of course, due to seasonality of our housing market. We tend to see a decrease or some plateauing effects regarding home prices in the second half of the year. So we don't see big increases in home prices, obviously in December, of course. So what we're seeing right now is a seasonality effect, but also due to a decrease in home buying demand, which is softening home prices nationwide. All right, so that's asking prices. Let's talk about housing inventory or active listing count, because last week it increased by 52.8% compared to the same time period 1 year ago. At 52.8%, this is more or less flat compared to last week when we had a 52.9% increase of housing inventory. And at that time, that was the biggest increase so far this year in the number of houses available for sale. Now, what's pretty astonishing is that we're seeing increases of housing inventory, again, up by 52.8% compared to 1 year ago. But despite that increase of inventory, which has been rising for more or less the past 11 weeks, or past 11 out of the last 12 weeks to be exact, despite this increase of housing inventory, we're seeing decreases in new listings. This has been a similar trend we've been seeing for quite some time. So this increase of inventory is really due to a pullback in home buying demand. We're seeing less contracts being signed between buyers and sellers, and also it's taking longer for houses to sell. In other words, houses are taking longer to sell, and that's increasing housing inventory. What's remarkable regarding this increase of housing supply is that this was completely different for the first half of the year, because look at this. For the first half of the year, let's just say January all the way until March, actually all the way until April actually, we saw fewer active listings compared to the same time period 1 year ago. So more or less for the first 4 months this year, we saw fewer active listings compared to 1 year ago. Whereas ever since May of this year, we've been seeing more houses for sale. And now they're up a whopping 52.8% on a year-over-year basis here. What's also quite remarkable regarding this increase of inventory is that this increase of 11 out of the last 12 weeks is despite the fact we've had fewer new listings for the past 22 weeks. So in other words, we've been seeing fewer houses being listed for sale on a year-over-year basis now for 22 consecutive weeks. But despite this, we've been seeing an increase of housing inventory. And again, this increase of housing supply is due to a pullback in home buying demand. Here's exactly what I mean by this, because here's new listings compared to 1 year ago. And look at this. For the past, I think it's 22 weeks. For the past 22 weeks, we've been seeing fewer new listings hitting the market compared to 1 year ago. So fewer houses being listed for sale for now 22 consecutive weeks. Here's something new though, because look at this though, because as we've important to you guys, we've been seeing double-digit decreases in new listings for quite some time. And to be exact, it was actually for 9 consecutive weeks. But look what happened this week though. Only a decrease of 7.9% on a year-over-year basis for the number of new listings. In other words, a new listing is when a home seller lists their house for sale. That's down by 7.9% on a year-over-year basis, whereas last week we were down by 17.3%. Also, as a note right here, this 7.9% decrease on a year-over-year basis here is the smallest decrease since July 16th of this year. Because look at this, July 16th, the share or the decrease was actually down by 5.4%. Now we're down by 7.9%. This is going to be a very important trend to follow here because this decrease of 7.9%, what if that gets into positive territory? In other words, what if we start seeing more new listings this year compared to last year? That's going to be really impacting our housing market. It's going to cause this number right here, active listing inventory, to increase even further. Of course, we're still down compared to 1 year ago for new listings, but of course, time will tell, and I'll definitely keep you posted. Let's also talk about days on the market, or how fast or how slow houses are selling right now. And look at this. For the week ended December 3rd, it's taking 9 days longer to sell a house compared to the same time period in 2021. So it's taking longer for houses to sell. And that's one reason why housing inventory has been increasing by double digits for quite some time now. Also, have a look at this because it's taking longer for houses to sell compared to 2021 now for 19 consecutive weeks now. So going back to July 30th of this year, it's taking longer for houses to sell compared to 2021. One thing I do want to mention, as I mentioned in my previous videos here, is that days in the market is based on closed home sales. Therefore, it's a lagging indicator what our housing market was like 1 to 2 months ago. Now, having said that, there's been very little movement up or down regarding days in the market for about 2 months now. Because going back to September 17th, for example, days in the market was 6 days. Now it's only 9 days longer right now. So days in the market hasn't fluctuated too much over the past couple of months. Let's change gears again and talk about the number of reduced price listings compared to 1 year ago, because look at this. Last week, we saw a 120.7% increase in the number of price reductions compared to the same time period last year. And by the way, 120.7% is the biggest increase so far this year. 2 weeks ago, it was 114%. And at that time, that was the biggest increase so far this year. But right now, 120.7, a giant increase compared to 1 year ago. And also the biggest increase we've been seeing so far this year in the number of reduced price listings in the US. On top of that, the number of price reductions has now increased in 6 out of the last 9 weeks. Also, on a side note right here, this is very important to note this because this shift in our housing market has happened so quickly though. Look at this, because for the past couple of months, we've been seeing huge increases in the number of price reductions in the US. Compare this to the first 3 months this year though, look at this. From January all the way until March, we actually saw fewer price reductions compared to the same time period in 2021, and now it's just the opposite. Actually, it's been increasing big time, now up by almost 121%. Let's also talk about the share of reduced price listings as well, according to altosresearch.com. Because for the week ended December 2nd, which is the most recent update they have for us, the share of price reductions right now is at 43%. This means approximately 4 of every 10 houses listed for sale right now have already reduced their asking prices. So 43% is the share of price reductions right now. And going back approximately 6.5 months ago, the share of price reductions was 21%. Therefore, the share has doubled in the last 6 months. Now, here's something very important to note here, because even though the share has increased or actually doubled in the last 6.5 months, there's been very little movement ever since August of this year. So the share has only increased by 3 percentage points in the last 3 months. Therefore, the pace of the share of price reductions has slowed dramatically since August of this year. All right, changing gears again, let's talk about how this week compares to years past, going back to 2017. Then, of course, I'll share a summary at the end of this video here and also provide some insights regarding or my predictions regarding what's lies ahead in our housing market here. So have a look at this. This is December 3rd, of course. Here's December 2021 through December 2017. So the same time period going back to 2017. So look at this. Back in December 2018, we only had a 7.6% increase in asking prices. Now it's a 10.3% increase. Also for active listings, only increasing by 5.3%. Now we have a whopping 52.8% of active listings. On top of that, back in 2018, this time, it was taking approximately 3 days faster to sell a house compared to 2017, whereas this year it's taking 9 days slower. And the biggest difference, in my opinion, is right here because the number of price reductions only increased by about 16% compared to 2017. Now we're up a whopping 121%. Okay, that was a lot of info to cover in today's video. So I actually want to provide a summary for you guys as well here. So inventory has been rising for 11 out of the last 12 weeks and rose by 53% last week. This growth is significant though, given the fact that there's been fewer new listings from last year for 22 consecutive weeks. And on top of that, new listings have been decreasing by double digits for 9 out of the last 10 weeks. And one thing I do want to mention as a note right here, the housing market would look a lot worse if new listings were increasing compared to 1 year ago, but in fact, they're not. And number 2, mortgage rates have decreased approximately 1 percentage point over the last 1 month. However, though, rates have nearly doubled since January 1st of this year. However, compared to 3 months ago, rates have changed very, very little. So check this out. The average rate on December 8th as well as September 13th was 6.3%. So in other words, going back to mid-September this year, rates are very similar to what they are right now, about 6.3%. Number 3, we saw a huge increase in the number of reduced price listings over the past 2 months, and last week was the biggest year-over-year gain so far this year. The share of price reductions has doubled from about 6.5 months ago, but the growth rate has slowed dramatically since August of this year. And lastly, number 4 here, houses are taking longer to sell compared to the same week 1 year ago for 19 consecutive weeks. Again, though, this is a lagging indicator. I also expect this to increase in the weeks and months ahead, given our seasonality of our housing market, but also due to a spike in rates as well. So what are some potential huge changes ahead, given the fact that rates have been above 6% ever since October 1st of this year? And by the way, of course, rates were around 3.3% on January 1st. So rates have increased big time this year. So number 1, buyers have been priced out or they're deciding not to buy a house, given the fact that housing affordability is still very much an issue right now. So this is, talk about this 1% rise in rates. Rates have risen approximately 3 percentage points over the last 12 months. And because rates have increased approximately 300 basis points, that causes a 30% decrease in buyers' purchasing power. And number 2, there's still a lack of housing affordability in the US right now. So for example, it's around $500 more per month compared to last year to buy an average price home this year. And that $500 more per month in your average monthly housing payment is a whopping 45% increase on a year-over-year basis. However, home buyers looking to buy a house right now would save approximately $200 per month compared to 1 year ago for those looking to buy a median price home in the US. And this is because average rates have decreased from 7.3% from about a month ago. Now they're down to 6.3%. And of course, because of that 1 percentage point decrease in rates, that causes a 10% increase in buyers' purchasing power. And number 3, we'll likely see more declines in home prices and home sales over the next couple of months. This could be significant given the rise in rates, but there's been very little movement in mortgage rates over the past 3 months. Again, rates have been averaging around 6.3% over the past 3 months. In my opinion, rates at 6.3% is unlikely to cause a feeding frenzy amongst homebuyers looking to buy a house based on rates decreasing approximately 1 percentage point in 1 month. And therefore, I would expect this housing market slowdown to continue in the near term. And number 4, to combat inflation, the Fed will raise the federal funds rate until inflation is in line with more long-term averages. This will increase interest rates for HELOCs or home equity line of credits, credit cards, and new auto loans, but savings rates will also increase as well. We probably won't have much long-term relief for mortgage rates until inflation winds down further. And by the way, the street is expecting the Fed to raise the federal funds rate by an additional 50 basis points in their next meeting, which is on December 14th of this year. And number 5, rates have been above 7% for the vast majority of October. We are seeing the effects of these high rates in November and December stats here, as you can see based on the report here from Realtor.com, as well as my updates from Redfin as well. And from this, we're seeing huge declines in home prices, home sales, pending home sales, along with rising inventory and price declines, of course. And by the way, the National Association of Realtors will not release November stats for home prices and home sales until late December. And also December stats will not be released until late January. That's one reason why I actually really like Redfin's as well as Realtor.com's latest housing market updates, which are much more timely than the National Association of Realtors. And lastly, subscribing is for free, and these videos really take me hours to make. So I appreciate you guys watching this video. I appreciate you guys very much. Hope you guys have an awesome day. I look forward to seeing you on the next video.